Thursday, July 24th, 06:57 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. If you'd like early access to this video, I have a Patreon page you could join. The link's right here. Get this and a lot more information a lot sooner than I'm going to post it on YouTube, along with a lot of other good information. This video is going to go over the U.S. stock indexes, give you some insight. If you listen to the media or read the media, press releases, they're limited what they're going to tell you and the time frame they're going to tell you. They have the right to do that. What I'm saying here is this month, we have many companies reporting earnings. That information is public information of who is buying and selling equity, stock in those companies from institutions that manage other people's money. Give you an example. You might have heard of JP Morgan, Fidelity, T. Rowe Price, Warren Buffett, Vanguard. They manage other people's money. They buy into and sell out positions in equity, aka stock. Every 3 months, that information they have to provide to the Securities Exchange Commission.gov, the official website. It's public information. You can see what they're acquiring, accumulating, what they're selling. Not real time. So when that information is being released to you by some media outlet, you can see that information on your own sooner than they're going to share with you, because they might be showing that to you weeks or months later. So right now, since the first day of this month, you can see, again, what board members or institutions that manage other people's members' money have been buying or selling. Example, Amazon or Tesla. Tesla reported earnings or is reporting earnings today. And you can see which institutions that were invested in that have been selling for the past 3 months, as well as other big board members. The stock sectors I'm going to show you are the 6 major ones. The most important one is the S&P 500. I say that's the most important because mutual funds, institutions, hedge funds, and individuals, many, use that index to compare their own performance of their investment funds or their positions. The S&P 500, again, has 500 companies in there. The S&P 500 has 11 sectors. Yep, it's diversified. I have other videos you can see, which was the better sectors this year, as well as several of these indexes I'm going to show you are part of the S&P 500. So again, when you buy the S&P 500, you are already very diversified in many sectors, 11 sectors, other indexes. If you want to perform or try to outperform it, well, then you could buy the individual sectors or single stocks, which would bring you less diversified. Again, you could beat the S&P 500. So this is a grid with the 5-year weekly. This is 5 years of history. Each candle's a week. And since today's Thursday, the current candlestick on the top right is not done yet. It won't be done till the close of the market. These stock indexes I'm showing you are part of the cash market. Cash market refers to the stock market trading from 0930 to 4 p.m. New York time. When you see the prices before the market opens or after the market closes, and they say these are the futures, that's another financial exchange. That is not the cash market. This is the cash market. And there's stock ETFs. You could trade stock ETFs directly through a broker of these stock indexes I'm showing you, because you cannot buy the cash index. This week, all-time new high. See the yellow horizontal line? All-time new high. And this yellow horizontal line, 2025 year low. So earlier this year, we broke above the highs of last year. Yeah, look at the past several years of the past administration, it was a bullish market. You may have people not telling you that, not sharing that to you, or giving you misinformation. The past administration was a bull market. And then the early part of this year, huge sell-off by choice of leadership. And now, bull market. The past several weeks, see the highs and lows. Smaller trading ranges versus these earlier ones. That's concerning. Remember, the market could go down faster than it can go up, which historically has shown it falls harder than it goes up. Don't try to catch a falling knife. That's the S&P 500. Cash index I'm showing you. The stock ETFs, that information I showed in the past on my Patreon page. This is the NASDAQ 100. This index is heavily weighted towards technology. It has 100 companies. You might hear two people referring you to what's called the NASDAQ composite. It's a different index than NASDAQ 100. Many newspapers, media outlets refer to the NASDAQ composite, but they'll just call it the NASDAQ. They won't identify if they're referring to the NASDAQ composite or NASDAQ 100. Again, I'd recommend you not to listen to those knuckleheads because they don't want to communicate effectively by choice. The NASDAQ 100 is part of the S&P 500. Look at that, all-time new high. And this is the Dow Jones Industrial Average, one of the oldest stock indexes. Currently has 30 companies listed in it. The 30 largest publicly traded companies in the United States, each individual one's worth hundreds of billions of dollars. GameStop is not on here. AMC is not on here. Costco is not on here. Again, these are huge companies in value. There's many requirements to be listed on individual stock indexes, as well as there's different requirements to be listed on stock exchanges. Give you an example of two stock exchanges. One's called the New York Stock Exchange. Another one's called the NASDAQ. And there's other ones. I made a video and released it a few days ago on the 30 companies in here. You can see the performance of them. Again, this index is very diversified, but it's only 30 companies, whereas the other ones are different indexes, have different number of companies. And being that said, the Dow 30, the NASDAQ 100, those indexes and other indexes have their companies changed out once in a while onto this index. The past several weeks, I've been sharing on my Patreon page several companies that have been replaced, changed out on several indexes. The companies that manage these indexes, they have policies, some of them every year, sometimes maybe more than once a year. They look at the companies that are underperforming and remove them and add companies that are performing better to keep the indexes performing better year after year, unless it's a bearish economy, bearish market. Yeah, so again, that helps goose up the stock indexes when they take out the bad performers, just like when you have a bad performing employee for any job. When you remove them and put a better performing employee, that's going to help the team and the bottom line, you hope. So right off the bat, if you look at this index, look at the yellow horizontal line. The high was last year. We have not broken that yet. It's underperforming the other stock indexes. This is the Dow Transports 20 companies. Dow Transports, airlines, trucking companies, other companies. As well, look at the top left. It's performing below the high of 2021. So this index, again, is part of the S&P 500. It's underperforming. It's not helping the S&P 500. But again, these indexes are going to be part of the S&P 500. You could outperform the S&P 500. The Dow Utilities, 15 utility companies, your electric, your gas. Look what happened this week. This week, we broke the high of last year. We made an all-time new high for the past 5 years. Let's adjust this now. Are you paying more in your utility bills? Electric, gas, Well, again, you're helping these companies earn more monies. Let's remove this old one. Took long enough to get back up here. So again, this is helping the S&P 500 perform better. This index is different than the other indexes in several ways. Sure, it's the utilities sector, but it also, most of these companies, if not all of them, pay dividends. Dividends are, if you're a shareholder, you're going to get a payout, might be every 3 months, might be once a year. So the basic point of dividends is to reward shareholders. A company could stop paying dividends. A company could increase dividends. A company could reduce dividends. And that's happened over years with many companies. Example, the company Apple, when they first started, they used to never pay a dividend. And then one of the older past CEOs decided to pay dividends. I think it was $1. If you own a company, if you pay dividends to your employees, that means you have less money to reinvest back in the company of hiring more employees or upgrading your company, as well as buying other companies. So again, leadership of a company has those decisions to make. Some companies rather roll the money back into research and technology to help that company develop new products to stay ahead of competition and see the stock value grow. Yeah, so that's one of the effects. If you pay a dividend, that doesn't necessarily mean that's going to help your company's value grow higher unless you raise prices of your product. Have your utility bills gone higher? This is the Russell 2000. Like it says, 2,000 companies are in this index. This index is not part of the S&P 500. And look, it's below the highs of last year. This index, the companies are smaller value. You'll find the value of companies, what I'm talking about is when you have companies valued at hundreds of billions of dollars versus a company that's valued at hundreds of millions, or a company that's valued at 10 million. Yeah, the smaller value companies are on here. Some of these companies may not be international companies. They only might be located in United States. They might only be products or services only in a few states, but they might meet the requirement to get on this index. And in the future, they might perform better to get into other indexes, or some of them might underperform and be kicked out of this index and go on to other indexes. There are rules for each of these stock exchanges and stock indexes. I already shared basic information on that. That being said, the Russell 2000 is one of the indexes that is most impacted when interest rates go higher. Yep. So if you follow the correlation of interest rates and the Russell 2000, when the Federal Reserve or financial institution raises interest rates, that affects, again, the smaller companies more. A lot of them have less cash on hand. They're working month to month, where some of these Fortune 500 companies have cash reserves, huge amounts that they're able to acquire companies, either giving cash or stock ownership. Okay, again, these are the cash indexes. They open from 9:30 a.m. to 4 p.m. New York time. There's another financial exchange called the futures market. The futures markets trade almost 6.5 days a week. What I mean is they open Sunday evening, 6 p.m. New York time, and they close Friday, 5 p.m. So they close basically 1 hour a day and all day Saturday. Yeah, you could trade these future markets if you have a broker that offers futures. So you're looking here on the 4 major indexes, the top left. The symbols are different because it's a different exchange. The top left, S&P 500, the second from the top left, the NASDAQ 100, the third from the top left, the Dow Jones, and the top right, or the far right, the Russell 2000. Each of those candlesticks here are 1 hour, and this is a 1-day chart. So you can see the bottom left of them was the lows of the past day and a half. And overnight, some of them made new highs and some of them did not. Look, top right, the Russell 2000 trending down overnight currently. And the Dow Jones, the second from the right, new low for the day. Look at that. New low for the day. And the NASDAQ 100 and the S&P 500, they're above the lows of overnights. The market, the cash index doesn't open until 9:30. These things could change between now and then. And they were trade when the U.S. stock market closes again at 4 p.m. These will continue trading till 5 p.m. And then they'll reopen at 6 p.m. Continue trading overnight till Friday, 5 p.m. Opportunities to trade before the cash indexes open. And these are called the futures market, which is a form of a derivative. I give a lot of insight what derivatives are. I'll say it again, derivatives, options market, futures market, insurance markets, derivatives. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.